Let me ask you something. Have you ever looked at a chart and said, okay, I see two opportunities here, but which one is really the right trade? You're not necessarily confused at what you're looking at on the chart. You're just kind of stuck between two ideas in the same place, trying to make sense of which one is the one you should take. If so, you're not alone, and this is where a lot of traders actually get into trouble. Well, in today's video, I'm going to show you exactly how to handle this situation using a rules-based trading approach. Now, this is a real conversation pulled from one of my recent New York live trading room sessions. So there's no fluff, there's no theory, just practical decision-making rules that you can apply right away. Real quick, and I'll share this at the end as well. If you find this video helpful, or really any of the videos that I do here on YouTube, do me a favor and subscribe. I'm trying to hit 60,000 subscribers. Not that it means anything, but thought it'd be fun to shoot for a goal. So help me out. All right, let's hop in. What are the B and C points you would choose? Retracements are a bit tough for me at the moment. I have a B at 48.30. So I don't know if we're allowed to go down to a lower time frame. I'm assuming it's this 1 hour time. Okay, that makes it a little better. All right, can we look at this Gartley / bat and ask ourselves what are the current B and C points? So I'll start off and I'm gonna let you guys answer this as soon as I get my chart the way I want it to. There we go, that should be crystal clear. So we're gonna have our X leg right up here. We're gonna have our A leg. There we go, A leg is down here. And the question is, which one of these is going to be our B leg? I'm going to put up a poll question so you guys can type it in. This is going to be 1, excuse me, and this is going to be 2. Am I correct here, Devin? This is the question, yeah. So which one would you have as your B leg, 1 or 2? I'm going to create a survey soon, and this will dictate, don't type it in yet, this will dictate what type of pattern you have. So keep an eye on it. I am making the survey right now. I'm adding the questions. Which way do you see it? I'll keep that. All right, we're going to end voting. I'm going to share the results. You can see that 12 people voted for 1, 6 people voted for 2. Now, I don't usually do this, but I think this one is I think there should only be one answer to this one. And I know that's weird, right? Akil is usually like, well, I can see it both ways. I can only see this a single way, right? I can only see this a single way. And let's take this back through the time machine, right? Let's go and analyze this pattern. And we're looking at this, we're looking at this, we're looking at this. We are going through the market, right? And we're starting to turn around right here. Now, at this point, would you guys have this as an X to A? All right, so we got our X leg, we have our A leg. What is the next step that we do as traders here? In our pattern recognition-ness, what is our next step after we identified our X to A? We want to bring on our fibs, right? So we bring on a Fibonacci retracement from our swing high to our swing low, to high of our X to low of our A. And we know we have our different levels, 382, or on Cypher alert, 50% bat alert, and Cypher technically 618. No more bat, but potential Gartley, and still technically a Cypher as well, 76 butterfly, right? So let's see what we're doing here. We scroll through, we scroll through, we scroll through. All right, we hit our 50%. So right now we are on an alert for what? At this moment in time, this could change. But we are on alert for a potential bat pattern because we hit that 50% retracement. All right, so still early. Things can change a lot. We can go up, we can go down. All right, we retrace back down. Now, do we have a valid C leg? Yes. I only see one yes. I think some of you guys are maybe confused. Is there anything invalid about this C leg? You can see by the fib that we do not pass the A. Is there anything invalid about the C leg? Is there any reason that you would not have this as a C? All right. So at this point, it is still a bat pattern. So I don't think there's anything technically we can disagree with. It's still a bat pattern. So we know that the only thing that's going to change this pattern is if we were to push past B, right? If price were to retrace past B and then do what? Right? This goes back to the lesson on morphing patterns. Mighty Morphin Pattern Rangers. That was corny. Okay, just forget I said that. Yeah, we would need to push past B, right? Creating a higher B, and then push back beyond C, because that would change our C, and then our B leg has to be the deepest retracement before the C, right? This is all rules-based stuff. So let's see, no pun intended, what happens with the rest of this setup. Okay, now we're back up to real time. Have we met any of the requirements to adjust our C leg? And therefore adjust our B leg, right? Going back to the question of which is our B. Has anything caused us to adjust our B to here? Nope. Therefore, it is a bat pattern. X to A to B, B to C, potential CD completion right up here at our 886. Our zone going from our 886 to our X leg. And seeing if we can keep up the trend of consolidating gold and filling it with lots of patterns. Whatever you guys know I'm trying to do here. Higher, it looks better on the higher time frame, but there we go. There's your answer. This is why I love process. Even in things that can be somewhat subjective, even in discretionary trading, if we have a process, and there are, don't get me wrong, there are going to be iffy situations where things are up for interpretation. But if we have a process, we can walk through that process, and many of the times it will clear things up, especially when we're stuck in a situation of like, man, I see it one way, but I might see it another way. And usually that happens because our eyes are going straight to this, but we're not walking through the process. Our eyes are going straight to this or straight to that. Sometimes we need to take a step back and just look at the beginning. And remember, I always tell you guys, right? Beginning of my trading career, I have a picture of this where on a really sad looking Walmart trading desk, but it gets the job done. Let's see if I can bring it up for you guys. But beginning of my trading career, I used to have my rolls printed out. And here we go. This is one of them. I used to have my rolls printed out. Where'd you go? Printed out and taped to the back of my wall. And what I would do with pattern recognition is I would just go through one step at a time, right? It's kind of blurry, but you can imagine in this trading plan, it says, all right, step 1, identify X to A. Step 2, and I would just go through it one step at a time to ensure that I didn't miss anything. And what I found is that when I would do that, it would get rid of a lot of this confusion, because I would be like, hey, actually, I never would have changed my B. It looked like it visually for whatever reason, but no, I actually never would have changed it. So getting in the habit of doing that, just even though we want to shortcut patterns sometimes, because we can see them and we don't always like go through the motions, and like a lot of you guys don't even use Fibonacci tools. A lot of you guys just use like the pattern tool on TradingView, and it has the fibs for you. Again, I mentioned this the other day. This is why I like actually physically drawing the fibs on. Right? I draw my X to A, my line out. That's one check. Then I draw the fib out. That's my second check. It keeps me in that process, so I don't ignore the sometimes small details that can change something. Jackson said it's not easy to learn. Is that well, no. Well, I tell you this: patterns are easy to learn. I think patterns are extremely easy to learn because they're just based off of rules. If you can follow rules, like anyone here can tell if something hits a 618 or not. What's hard to learn is price action. And we get this whenever we get a new flock of traders in, right? One, a lot of the struggles are on price action, meaning reading the ebbs and flows in the market. And the main reason for it, now don't get me wrong, it's hard no matter what, but the main reason for it is people don't value it, right? We have 2 courses dedicated to price action only before we get into any strategies. But when you look at, hey, let's learn how to read a price chart, everyone kind of puts it to the side like, well, it's not a strategy. I can't make money off of it. So they don't really pay it the attention that it deserves. But by the time you get into patterns, whether advanced patterns like this, Gartleys Bats ciphers, whether they're classic patterns, double tops, head and shoulders, whatever it may be, your identification skill all comes from reading a price chart. So if you can't properly read a price chart, you're never going to be able to properly and consistently identify the patterns that you actually want to use as a strategy to make you money, right? So it's one of it's one of those things where people just don't spend enough time. And I was the same way. I told you I wasted like a year shortcutting stuff, but people just don't spend enough time on the stuff that is I don't want to call it remedial, but remedial in the bigger picture. It doesn't. They don't see the immediate benefit from it. So that's why this is hard, because people just don't spend enough time mastering reading a price chart. I would say that. So an example of a morphing one would be like this. So let's say price action, and I hope you understand. I hope you're not saying it so I lay off of you. I really want you to understand. I know sometimes I'm pretty direct, but like, if it doesn't make sense, let me know. I want to clear it up. I don't want it to be like, yeah, I understand. Like, just stop harassing me. So just keep that in mind. But so here would be an example of a morphing pattern. No, I'm serious. Some people do that, and it's like, and to avoid conflict or whatever, and then like they don't actually learn. So my goal is for you guys to learn. That's all I care about ultimately. Bigger picture. All right. So X to A to B, right? Let me just make sure this is actually at an appropriate fib level for us. Nope, too high. All right, let's go down here. There we go. X to A to B. And let's say we had a C leg like this, right? So at this point in time, we're all screaming bat, right? No, wrong tool. There you go. Are we all screaming bat at this point? And I'll keep the fibs on so we can have reference. Yeah. Bat pattern. We're waiting for this thing to complete. So let's say price were to come up here. This is going to be a wonky looking one, but just to get the example. Let's say price were to come up here. And then we did this. Now things have to change, right? Because our C leg needs to be our deepest retracement. And although this was once our deepest retracement, it is no longer. So our C must shift beep, 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 boop, 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 over here. Now, our B leg also needs to be our deepest retracement prior to our C. So our B leg can't stay here because we have a deeper move here. So now this would shift to there. And because this shift hits a 618, now it changes from a potential bat pattern to a potential Gartley pattern. So that would be an example of a morphing pattern. But you can see the difference is that new C leg is what makes us adjust to the B. In this scenario, we never got a new C. The original C, OGC, remained. So there was never any reason to adjust the B. Ali says, easy rule for everyone to remember. You can write it in your trading plan if you want to. If we have a bullish pattern, then, or the lowest C point determines the B. If we have a bearish pattern, then the highest C point determines the B. I like that, Ollie. I feel like I could have just said that instead of drawing up all these charts. Oh no, other way around. Did I read it wrong? If we have a bullish cipher, oh yeah, I get it. Yeah, flip-flop that the other way around. Yeah, I do the same thing. Whenever I see this, I think like bullish cipher because I'm waiting for, or bullish bat because I'm waiting for price action to go bullish. But it's actually a bearish one because this is the trade. So yeah, I do the same thing all the time. So I get it. So flip it around. In a bearish bat, the lowest C. In a bullish bat, which you don't have drawn on, the highest C. Yeah. You know what? If someone doesn't figure that out, then they don't deserve to be trading patterns in the first place. I do the same thing because my mind is like, all right, we got to go up. And whenever I think of up, it's bullish. So I'm waiting for the bullish move. And I'm only waiting for the bullish move so I can get bearish. Yeah, that's why I don't like words. Way to ruin everyone, Ollie. There's some new trader that just wrote it down, and now they've got it backwards, and they've lost every pattern. And it's your fault. It's all your fault. Please, can you explain how you would use price action knowledge when going to advanced patterns? Yeah. Reading the X and the A, reading the A and the B, reading the B and the C, and reading the C and the D, right? A pattern is nothing more than price action, right? A pattern is a series of ebbs and flows that come to a very specific fib level in a very specific order. It is reading price. Your X to A leg is reading price. Your A to B leg is reading price, right? All of the ebbs and flows in a pattern, this is reading price. So when we tell you all that stuff at the beginning of the foundation course where it's like, hey, we're learning about trend and new structure highs and excuse me, start marking up your charts, right? And you know, drawing out these ebbs and flows, right? These are the legs of your patterns, right? Obviously, they're not all going to be legs of your patterns, but these are the legs of your patterns. Yeah. Price action at its lowest level, excuse me, is a candlestick, right? And your trends and your ebbs and flows are a series of candlesticks. So yeah, you can't read a series of candlesticks without reading a candlestick. Yeah. So it's all the same thing. It's price chart, guys. Let's not. I feel like we're overcomplicating this. Let's simplify this. I feel like we're overcomplicating this. We're maybe digging too much into it. Yeah, let's keep it simple, guys, right? What's in front of you? Candlesticks. Moving up and moving down. Let's read that, right? Foundation course 1. Let's mark up some ebbs and flows. Remember the homework? Go through charts and just draw on the ebbs and flows of price action. Let's just start there. Gotcha. Scott says, I meant high, low, doji. Yeah, it doesn't matter. Who cares? Right? Does the X leg matter if it's full of doji candles that all go in the same direction? No, just look at the macro picture. Does it go up and down? Yeah, come on. Don't overcomplicate this stuff. Does it matter if there's a doji in the X leg, guys? Does it matter if it's a high momentum candle, a low momentum candle? Like, no. Just look at the look. Look, we go from here to here, X to A, right? I don't care what this candle is. I don't care about the wick. Look, no, we go from here to here, X to A. We go in a straight line up and down, X to A leg. Hey, we go back down. Look at that, A to B. Hey, we go back up again. Oh, B to C, right? Who cares what's inside this thing, right? We go up, we go down, we go up, we go down, we enter the trade, we make money. Boom. So hopefully that gave you a clearer and more structured way to handle situations where you're a little bit confused between one option or the other option. In this case in particular, we're dealing with advanced patterns, but in any situation, this is why it's important to have a rules-based approach. That way we're not doing what we want to do, and instead we're doing what we should be doing. And of course, if you've been with me for any time, you know my philosophy, you know my formula: consistent analysis plus consistent execution equal consistent results. Oh, and yeah, if you ever want to join us in the live trading room, feel free. It comes part of your 14-day risk-free trial membership over on our platform. Not only the New York live trading room, but the London live trading room with Jason Greystone as well. You get two, and if you can't make it live, you get the recording. So yeah, do it. www.tier1trading.com. It's risk-free, no auto bill, nothing sneaky like that. And I hope to see you on the platform.